Hi, I'm Mal from the Money Study, bringing you another episode of our Take 10 Challenge, and we're up to number 82 to talk about this thing called gold. There's my disclaimer: facts, figures, information only. This is not advice in today's video. Does it make sense to buy gold? Uh, well, it obviously depends on your own situation, obviously. But there are pros and cons of owning gold, and it's been around a long time. Generally speaking, gold has been perceived to be a bit of a protection against market turmoil. Gold has sort of got its value, and so if things are getting a little bit dangerous with markets falling or some other sort of political unrest or whatever the case may be, people head towards gold as being something that's got a value, maintaining its value, and has maintained value over time. Yes, it goes up and down in price, no doubt about that, but its long-term value seems to be maintained. So people sort of head towards gold when things aren't going so well. It can diversify a portfolio, meaning that if you've got shares that are falling and crashing because of this market turmoil, then your gold may indeed be going up in value. Not necessarily, it doesn't always have to do that. It's not always going to work completely as a protection. And basically in 2008 it actually went down in value, but there are certain times when this thing can work exceedingly well. We never know in advance when it's going to work well for us and not. So anything like that, anything that's different in our investments, so we've got our shares, we've got our property and so forth, having a bit of gold will diversify that, just spreading our money across different assets. Now, a lot of the things you read from investment world, they up to, generally speaking, recommend it up to around about 10% can be a good idea to have as a diversifier in gold. Now, whether that's suitable for you or not, we'd have to look at your overall scenario there to work out whether that makes sense for you or not. But yeah, look, having it as a diversifier, generally speaking, can be quite a smart idea. Got to be a longer term investment, obviously, in the regard that, yeah, fluctuations happen all the time, and it is supposed to be a diversifier. Therefore, we need it there for the protection in the times when, it'll go, things move in cycles. So we don't want to be in and out too quickly. Having said that, if we obviously can believe that gold's in for a bit of a quick rise due to whatever reason, then yep, you might be buying gold purely just to pick up the value in that particular circumstances, in that cycle swing. But normally people hang on to it for a longer term. Now, the thing you've got to understand with gold, of course, is that it doesn't generate any income, no dividends. So, it's not like money even sitting in a bank account. At least money in a bank account generates some sort of interest. And if we've got shares that we're getting some sort of dividend, generally speaking, gold is just, we're not relying on it to generate any money. We're just relying on it, hopefully, to either keep its value when things are going badly or indeed go up in price, over time. So it's a little bit different than probably our other investments. Not as easy as to buy and hold. We'll talk about that in a few slides' time, how we actually go about doing this. So not as easy as just literally, having a situation where we can just log in and get onto our trading account and buy gold. But we will explain that in a minute. Now, of course, at the moment, having gold in Australia has been wonderful because, generally speaking, the price of gold has been set in American dollars, and therefore, as the exchange rate changes between Australia and America of late, our value of our gold has skyrocketed as the Australian dollar has come down in comparison to the American dollar. So even though the gold price has been going up in American dollars, it's been going up more in Australian dollars, literally because of this, how the Australian dollar is valued against the American dollar. So it's sort of like there'll be good times and bad times, obviously, depending on which way the Australian dollar is moving compared to the American dollar. But it has been, in fact, what they call a hedge, meaning it's like you're hedging your bets, that even though the Australian dollar is going down, having the gold means our value is actually going up because of its comparison, how it all works. So can work. The gold can just even work as a currency hedge in protecting us from these movements and so forth. Does it make sense in the regard of gold as such? Well, obviously, if there's a finite amount of gold available, it's getting harder and harder to dig gold out of the ground, which in theory, anything that becomes scarce should indeed be pushing up the price there. It's just getting more and more expensive to dig that one more ounce of gold out of the ground. Anything that becomes scarce becomes more expensive, generally speaking. Now, the central banks around the world hold reserves of gold as protection for these currency swings, which we've already mentioned there. And some of the countries as well are really loading up on gold, especially countries like Russia and China and so forth, believing that they eventually want to break away from this dependence on the US dollar, in which case they could be doing a very smart move here. But of course, if central banks in some of these countries are loading up on gold, means the scarcity of gold is becoming even more so, because these countries have been buying it and buying it and buying it. That would, in theory, push up the gold price. So there's certainly sort of geopolitical things to consider here when we consider the price of gold. Low interest rates can cause currency to devalue. Say if the Australia dropped its currency interest rates, it means that the Australian dollar would normally go down in value and so forth. Hence, gold becomes this hedge against the currencies where whatever the Australian dollar is compared to. I say compared to US, we're down. We've certainly lost a lot of the Australian dollar over the last year or so. The world is certainly becoming very volatile at the moment, and it's distorted. Its economics have been distorted by basically central banks printing money, borrowing money. It's become more difficult now, of course, with interest rates getting higher and higher and higher. All of these things have an impact, and as debt becomes a big problem, gold should, in theory, become, as you say, a bit of a safe haven there. Now, the interesting part about gold is that it's basically over the generations. There's an interesting little snippet that says that if you had a certain amount of gold back in the days of the Romans, and you were to buy with that gold, bought a very nice toga, as a Roman senator or whatever, that same amount of gold now buy you an Armani suit, so it's basically saying that it holds its value, whereas the value of a dollar over time has come way, way down with inflation. So gold, even though its dollar value fluctuates over generations and centuries, its value is actually maintained, or actually in its purchasing power. What can you indeed buy with an ounce of gold and so forth? So it's just a different way of looking at it, rather than considering it in dollar terms. What is its value? What is its purchasing power over generations and generations? So as we sort of said, what moves the gold price? Yep, confidence in the financial system. That's number one, can be one of the things that will certainly move the price as people see it as a bit of a safe haven there. Supply and demand, yep. The cycles where gold jewelry can be certainly useful. The use of gold in industrial things like in gold contacts and electronics and so forth, gold's used. And also if there's more and more people using it for investment purposes, it's also putting up the price. But typically, supply and demand, just like everything else. Interest rates, we've already mentioned there, and of course the exchange rate with the US. All these things have an impact, and we need to understand is what is going on with these things right now. Is that a good time to be purchasing gold or not? But how do we buy gold? Yep, we can buy gold, we can buy physical gold, meaning that we could go to like the Perth Mint here in Australia, and we can actually buy bullion. We can buy a bar of gold. Now, of course, it does come in different sizes of your little ingot of gold, or a little an ounce, and so it goes on. You can buy various different quantities of it, and it's amazing what $30,000 looks like as a bar of gold. It's not hellishly big, but we can certainly buy the bullion from them. Now, because if you buy it as bullion or gold, as coins, you can buy gold coins, and sometimes there's a collective value to those as well as just its intrinsic value, and of course the gold jewelry. The problem with this sort of tangible gold is, where do you keep it? People like the Perth Mint, you're allowed to leave it in the mint. They will keep it, and they can basically earmark your gold as saying this is your bar of gold, but we'll look after it for you, in which they'll just charge you a holding fee. You might be using it. You might be able to use a safety deposit box at a bank. You might have a very secure home safe or something like that. But yeah, storing the gold is certainly difficult, and it obviously got to look at the security of it. And so there could be a cost involved in doing that, which is obviously eating into our investment. Needs to be considered. And if you've got a home safe, obviously it wants to be very safe. If you're storing, $50,000 worth of gold in your safe, what happens if your house burns down? Is it a fireproof safe, and so forth? Now you can buy what we call paper gold, meaning that there are ETFs that reflect the price of gold. So you are basically buying an ETF that is following, in theory, the value of gold. Now, remembering that any paper gold, things can change as people buying and selling ETFs, as we sort of indicated before. They may not be completely accurate. It should follow it fairly closely, but there could be discrepancies on what your value of your ETF in gold is worth compared to the actual gold price if things really start to play up and move quickly. A lot of people look at the easiest way to do it is literally just to buy gold companies, so that they are buying gold miners, people that mine the gold or deal with gold, and so that as the value of gold goes up, then in theory the value of the gold mining companies should go up. Now that hasn't quite been the case of late, and there's been some situations where mining companies have actually struggled in their price, but the gold price has gone up. Now, in theory, is that a good time to then be buying those mining companies as people realise that, in theory, the mining companies' value should go up? These are all the sort of things to consider. Different ways of looking at it. Maybe a case that if you've got a little bit of gold, in your safe, a little bit of gold in ETF, and you've got a few gold companies to make up your 10%, and so it goes on. Different ways of looking at it, but certainly something to consider. This thing called gold. Been around a long time, and things been around a long time. Generally speaking, there's some merit behind it. Happy to have a chat about all the different ways in doing that, and of course look forward to you joining me on another session.